You have probably heard the story of the hare and the tortoise. Well, it turns out that the lesson also applies to investing as well. While many investors try to get rich quick, FOMOing from one thing to the other and obsessing over short-term gains, the smart investor takes a slow and steady approach, focusing on the long-term picture. In this video, I'll give you 6 reasons why you should be a long-term investor. So let's get started. The main reason why you should take a long-term approach to investing is because it has been proven to work best for 99% of investors. There's a very high probability that you'll fail at being a trader or trying to pick the next big winner that will make you rich overnight. People who try to trade or time the markets often lose out to those who follow a long-term buy and hold strategy. They simply buy a stock, index, or any asset and hold it indefinitely. Investing isn't a get-rich-quick scheme. It's a build wealth for sure scheme, if you give it enough time and don't take unnecessary risks. I'm not saying you can't buy a high-risk, high-reward type of investment. I'm saying that if you do, you need to have a long enough time horizon where you can actually let those bets play out, and still be fine if it didn't turn out the way you hoped. This ties into the second reason or benefit of long-term investing, which is that it's much easier to predict what's going to happen 10 to 15 years down the line and make an educated guess on what the economy or society will look like versus guessing what's going to happen in the markets tomorrow or next month. Unless your job is to constantly monitor the markets and track all the companies or projects you invest in, you're not going to be able to know or predict what's going to happen next. It's much easier to look at certain current trends that are already happening, like solar energy, AI, crypto, and biotech, for example, and bet on those trends to continue and even grow in the future. Because you're investing with a long-term time horizon, you can also invest in things that will have a big impact on society in the future and reap the benefits of its long-term growth potential. This is why I invest in growth stocks and ETFs, but also things like Bitcoin and Ethereum, because I'm still young and I see a future where these can play a bigger role in society. I'm also very curious to hear your long-term predictions for our future and how you are investing in it, so let me know in the comments below. The next benefit for long-term investors has to do with a peace of mind, because investing can be very stressful, but only if you approach it the wrong way. So especially if you're trying to make short-term plays where you're hoping that the market acts in a certain way, you'll constantly be drawn to looking at prices and see what the market is doing. While at the same time, you could also just buy and hold and basically not look at it for a couple of years, because the short-term ups and downs don't really matter anymore, because you don't plan on selling for years or even decades. Recessions and broad market corrections like the one we have been going through since last year aren't something to be afraid of, but to be seen as an opportunity to buy even more at lower prices. This mindset will give you a peace of mind and will allow you to sleep at night without worrying what your investments are doing. Create an investment strategy and stick to it no matter what the markets are doing. This next reason to invest for the long term will help you achieve this peace of mind and strengthen your conviction. Because if you invest your money in a broad market index, historically speaking, you'll never lose money over a 10-year period, meaning that as long as you hold on to your investments for at least 10 years, you always make a profit. So even through extremely rough periods like the Great Depression in the 30s, the dot-com bubble, or the financial crisis of 2008, if you just held on, you would have seen that the market recovered over time, because over a long enough time period, the stock market broadly goes up. And the reason why we can say this is because it's been doing so for over 100 years now. And of course, times can change, but as long as countries don't collapse, people will continue to build and innovate, and long-term investors will be able to profit from it. So if you do see that the markets are down by a lot, don't assume that this is the end of investing and sell everything. Again, see it for the opportunity that it is. I already briefly mentioned this before, and it's one of the biggest benefits of long-term investing, and that's compound interest. This basically means that your money is growing exponentially when you invest it for a long enough time. Compound interest is a type of interest that is calculated not only on the initial amount of money you invest, but also on the interest that accumulates over time. In other words, it's like an interest on top of interest, gains on top of gains. Let's say you invest $1,000 and it grows by 10%. At the end of the year, you would earn $100 in interest, bringing you to a total balance of $1,100. In the second year, you would earn interest on the $1,100 and not just the original 1,000. So your interest for that year would be $110 and your total balance would be $1,210. This cycle repeats itself each year, with your interest earning more and more as your balance grows. In the beginning, it might not seem like a lot, but if you give it enough time, it makes all the difference. For example, Warren Buffett, the famous investor, made over 90% of his wealth after he turned 65. So don't underestimate the compounding effect on your investments and give yourself enough time to take advantage of this. The last and probably biggest benefit of investing in general, but especially for the long term, is that the broad market, at least in the US, goes up about 9% every year. And maybe 9% doesn't sound like that much to you, but when you combine that with compound interest and let's say a decade or a few decades of consistently investing every month, you'll be surprised how far you can come with investing even $100 every month. For example, if you invested $100 every month for 20 years with an average 9% return, you would end up with around $67,000, of which $43,000 would come from the interest you earned, which is almost twice the amount you would have invested yourself. I totally understand that it might seem scary to invest your money. You might get frustrated if the value of your portfolio goes down, or you're nervous because you're not getting the returns you hoped for in the first few years. But the important thing to do is not sell, because that's when you realize those losses, meaning it can't recover anymore. While if you just hold on, keep buying and let the market and compound interest do its thing, it's almost impossible to lose money over the long term. That's it for now. Those were the main reasons why you should be a long-term investor. If you got some value from this video, be sure to like and subscribe. That really helps me out with the growth of this channel. And if you want to start investing today, I have a video right here that covers everything you need to know. See you next time.